Good morning, everyone. My pleasure to be here. I'm Stefan Kolibar, Head of Marketing and Partnerships at BONARD, and I'll be pleased to present you a few slides this morning at Relax conference and prior the student housing panel discussion. This will be the presentation of key findings of our 2020 student housing annual report that we released a few weeks ago. The presentation is basically a concise overview of major KPIs or key performance indicators of the markets, including demand, investment mood, pipeline and new projects. And I'm very much looking forward to this. The presentation deck will be available for download. And the nature of the presentation is set the way that it will be to cater for both those who are engaged in student housing as well as those who are new to the subject. So let me move to the first slide quickly about us, where the data is coming from, so that we know how it is grounded and founded. We as a team and our data cover all continents, 130 markets and sub-markets, 7,000 purpose-built student accommodation assets in private, public and religious stock, about 1,000 new developments in pipeline, all the transactions and opportunities, as well as the results of student preferences conducted over more than 100,000 students through student surveys on the street level that we conduct every year and regularly. The data is independent, certified and delivered in rapid fashion for timely decisions of our clients and partners, which are basically more than 40 governments, hundreds of universities and more than 700 investment groups that are engaged and exposed to student housing and to which we deliver either on the report or subscription level. Let's start with the overall market temperature, so where we are. We're looking at the ranking of 30 asset classes, just an overview, not everything is listed. And this is the ranking by investment and development taken from hundreds of different real estate stakeholders. Where student housing basically ranks 15th out of 30, so right in the middle. It's above mainstream asset classes such as office, retail and hotels, basically for the first time in history. And student housing is number 4 when it comes to relatively sizable asset classes after logistics, BTR and senior living. So in a nutshell, student housing in and after COVID is and will be enjoying relatively good market position and quite a lot of investment demand, mostly due to its confirmed sort of stronger crisis resilient as it proved in GFC, but also now, which confirms defensive counter-cyclical nature of the asset class. Here's a slide showing higher education enrollment in Germany over the last 70 years, basically student numbers, domestic and international in the country. And as you can see, it spans across the various economic downturns in the history. And as you can see, it basically shows that in and after each economic downturn, the student numbers increased. So we can notice that basically there are more students and more students expected after economic downturns, which is or can be related mostly to 3 factors. The first is that studying is age-limited phenomenon, so people cannot delay and defer it forever. It's not an unnecessary good, and there are limited other, especially job opportunities in times of such economic downturns. Therefore, we usually see same or high level of student applications during or after these periods. Let's look at another slide, which is a bit more complex, and let me explain bottom up. So in the bottom part, we can see in the brackets the economic and mobility implications from March 2020 up until summer 2021. We can see some limited economic performance and mobility, especially on international level. When it comes to economic performance, we are in a W-shaped economic recovery. So we've seen a wall in May 2020, then a peak in summer in the Northern Hemisphere, and then it's a vaccination period with an end of government guarantees. So we will see some downturn and more increase is expected as of the beginning of the new academic year and in September 2021 on the Northern Hemisphere and or the second semester in the Southern Hemisphere. When it comes to student housing asset class performance, especially occupancies, which you can see in the upper part of the slide, basically in the first semester of 2020, so summer semester of 2020 in the Northern Hemisphere in Europe, the occupancy was held pretty firmly in about a zone of 85 to 95, especially in Germany or German-speaking world, Netherlands, CEE, as well as the United States. The UK and Western Europe was in the zone of sort of 80 to 90, and some of the T1 cities of Europe, especially Dublin, Madrid, and some Italian cities, performed in the zone of about 60% occupancies. So it was not a fortunate time, but still student housing held better than many other asset classes, especially hotels or office or retail. In the autumn, we saw a slight dip in the average occupancies in the zone of 80 to 90%. The pattern was pretty much the same. Germany and Netherlands, as well as CE, were performing quite well. So it was not a fortunate time, but still student housing held better than other asset classes, especially hotels, office or retail. In the autumn, we saw a slight dip in the average occupancies in the zone of 80 to 90%. The pattern was pretty much the same. Germany, the Netherlands and CE were performing quite well. Recently we made the mystery shopping across multiple assets and portfolios, and the occupancies are now pretty much on the same level, but often on expense of discounts, and I will have a special slide on this later on, though there are 5 reasons why the occupancy is on such a reasonably okay level. The first is that operators work on the renewals, so renewals are stronger and students stay longer. Hence the cohorts of upsells are subject to much more creative marketing. Then students consider their study destination to be their home, where they have their friends, their roof, their social networks, their job. So they tend to be rather there than staying home for the long term. Then, as I mentioned, marketing activity has become much more sophisticated and intensive, and we will see as it factors into higher marketing costs for operators. And then the student housing premises open to new audiences and cohorts, especially young professionals. So that's where the premises sort of found some additional tenants. Another reason is that in general, student housing premises and assets have become sort of lighthouses of safe and structured environment in COVID times. So there's sort of propensity from HMOs and flats towards structured accommodation, and it played well for the structured PBSA. And then Erasmus program is another factor, which or where one of the conditions of more than 300,000 students that take Erasmus program is that if they don't want to lose the funding, they have to be physically present in their study destination. So they have to come even if the studies are online. Let's look at transactions now, which held at a reasonable level. In continental Europe, we had pretty much the same level of transactions in 2020 comparing to 2019. In the UK, it was a bit higher. On the other hand, it was driven mostly by the Blackstone deal, which created not only the biggest proportion of overall transactions in terms of the ticket, but also it has influenced the transaction activity. As basically everything else after that is cheap or cheaper. So in terms of number of transactions, we had 89 in the UK and Europe in 2019 and 74 in 2020. So it's about 13% less, which is not such a deep as in other asset classes. When it comes to transaction value per bed, as you can see on the right, in the continental Europe, it's traditionally slightly higher than in the UK, which is mostly due to the type of a product. As in the continental Europe, it's mostly studios, while in the UK, it's not necessarily so. Our studios are not as represented, and there's also lower yields in many cities in European market. In terms of average deal value per transaction, in continental Europe had bigger tickets than the UK, as multiple assets per transaction were subject of the capital movement. Therefore, it's 85 to 31 million per deal. On the right side, you can see the assets that are transacted in Europe compared to the UK in terms of their size. 324 beds compared to 286 in UK, which also influences, of course, the transactional activity. Let's move to marketing costs. I already indicated that they have increased, and here's a detailed look. When we look at the performance of particular properties and their OPEX, CAPEX, management costs, etc., the marketing cost represents in proportion in the zone of 1 to 9% of the overall APEX, so in average about 5%. And out of that average 5% of OPEX costs, the marketing costs increased about 10 to 15% if we average all the values. So in other words, it has increased, but it's a minimal impact on OPEX, therefore on NOI and valuations. So the valuations of the operating assets stayed pretty good, and COVID has not had such a major impact for the sort of price. We also had a look into product. Across those 7,000 properties that we monitor, we took a case study of Valencia, Spain. We've compared the existing stock, so what is built and available for students, with student surveys. We found out what they actually want. And the biggest imbalance in a new product coming to the market based on, again, what students really want, will really prefer, but don't have, is bar, cafeteria and club as part of amenities. Usually one of the average 15 amenities that need to be in a new private PBSA. On the other hand, what they have but don't necessarily desire is a communal kitchen and terrace. So this way the new product probably will be adjusted. And even in and after COVID times, they sort of desire to have social communal premises for them, which is the main added value for this asset class. Now let's take a look at outlook for 2021. You're looking at a chart. This is a result of a research we did in January before the report release. We wanted to provide the audience basically with status quo over 25 major operators representing more than 300,000 beds across the UK and Europe. As they represent more than 50% of the private beds in this geography, we counted around 500,000 private beds on the market now. And as you can see, about 56% do not do any additional actions. About 8% does COVID booking guarantees, which means that there's no pay until you move in. 20% rent reduction adjustments, usually in the zone of 50% for a timely limited period of let's say 6 to 8 weeks, and only for students that cannot come for objective reasons. And about 16% of free cancellations and flexible status adjustments. When we look at the investment mood, this graph is a result of a research done in the autumn 2020, so a few months ago, representing basically stakeholders with 200,000 beds globally cumulatively. And as you can see, about 10% wanted to divest. None of the respondents, or considered to divest, none of the respondents wanted to refinance or needed refinancing. 25% put their investment on hold, and 65%, so basically 2/3 of the respondents, wanted to continue in investments or have increased investments in student housing. So basically the overall investment mood is in a reasonable status. Here's an overview of pipeline. It's a European map where you can see some selected cities. As we monitor all the opportunities, the pipeline and new developments, we can say that 79% of all the assets that were due to be open in 2020 actually opened in 2020. So only 21% were delayed, which is not necessarily attributable to COVID situation, but it's pretty much normal ratio in the delay. Even before COVID. So the sector is in relatively healthy condition in terms of new openings. And as you can see over here, these are selected cities again, not all of them. The pipeline is relatively strong. We expect about 207,000 new beds to be open in the next 2.5 years, which represents about 14 billion investment and debt opportunities in the asset class. So we're basically at the end of the presentation. As I mentioned in the beginning, the presentation showed key findings of our recently released Student Housing Annual Report 2020. So should you be interested in receiving the full report, the copy of the full report, of course, on a complimentary basis, then please just register using the link on the slide, or feel free to come to our website and you will surely find it there. And that's it. Thank you very much for your attention. Thanks for having me, Richard and Thorsten, as well as for organizing this week of sessions under the Relax brand. All the best for the rest of the event today. And I hope that the session was informative. It will be informative also for the following panel discussion that I'm very much looking forward to watching, and also for your business. Should you wish more understanding, data or opportunities in this asset class, of course, I'd like to kindly invite you to talk to us. Again, thank you very much and have a nice day.